Okay, what's up everyone? This is Scott here again with my next live trading video. Today is Monday, April 11th, and I've got some very exciting news for this channel here. So because I want this channel to be all about options trading and to be all inclusive of every different kind of strategy and aspect about options trading, that's why going forward for the purpose of these videos here, I'm going to start trading all different kinds of strategies. So of course, if you have been watching my channel for some time, then I'm sure you know by now that my particular approach to options trading is I sell naked options and then I either buy or short the underlying stock to hedge the contracts that go in the money. And so I will absolutely still keep making live trading videos like this that will show the kinds of things I'm doing with my particular style. But at the same time, I will also make live trading videos, as you'll see here in this one, that show credit spread strategies or debit spreads or covered calls, the wheel strategy, poor man's covered calls, ratio spreads, all that other kind of stuff. And again, it's because I want this channel here to be all inclusive of every different kind of trading strategy, mostly options selling strategies, of course. But I certainly know, for example, my particular approach is not suitable for everyone watching these videos, right? Based on your level of experience or the amount of capital you have available to you, things like that. So again, that's why I want to show all different kinds of strategies, because those kinds of strategies can also be very effective as well. Now, the downside of doing this, however, is I personally don't have the necessary amount of capital to do all these different kinds of strategies, or also do some experimentation and perhaps show you guys what not to do in some situations and perhaps lose money on purpose so you can see the results of that, etc., etc. So that's why for the purpose of these videos going forward, I will be using a paper money or fake money trading account with thinkorswim here. And so for this paper money account that you're seeing here, I've given it a starting amount of capital of $250,000, which I think is probably more than I need, but we'll see. But the good news though, as you'll see in these videos going forward, is the paper trading feature with thinkorswim is extremely realistic. So all the trades I'm going to be making here are based on real-time stock and option pricing. The trade executions, as you'll see, are very realistic in terms of the fill prices and things like that. So basically, it's going to be real live trading just with fake money. And of course, also, I will still be managing and trading actively in my live money account as well. And perhaps I will show that from time to time in these videos too. But again, for the purpose of being able to show all different kinds of strategies and experimentations, what to do, what not to do, etc. That's why I'm using this paper money account going forward. And so in this particular video, I'll be placing two brand new trades, both of which will be short put options, but I'll manage them very differently. So the first trade is going to be here in Coinbase. COIN is the ticker symbol. This company is basically an online brokerage that involves trading cryptocurrency. And so for this one, I'm going to use a bit of technical analysis to sell that put option. And then I'm going to manage this trade in the same way that I normally do with my particular approach, as you'll see here in a moment. And then for the second trade, I'm going to sell another put option on Nucor, which is involved in steel production. And for that trade, I'll manage it with the wheel strategy. But as always, before we dive in here, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, so now diving in here, and first off, let's actually go to the SPY charts real quick and take a look at that. This is an ETF that tracks the S&P 500, and oftentimes I look at this chart as well as the NASDAQ or the Russell 2000 to get an overall assessment of what the broader market is doing, right? Because basically, depending on where the broader market is right now, that's going to dictate my directional assumptions on the trades I'm making. So in the case of SPY here, or the S&P 500, obviously, as you can see here, we've undergone quite a bit of a sell-off. And at this point, we've actually broken down below both the 200 period moving average here in yellow, as well as the 20 period moving average there in blue. And now we are starting to approach the support level right there, right around $440 per share. Although admittedly, this is definitely a pretty weak support level. It's obviously not super well defined. But the point here is I tend to be a contrarian-based trader, meaning when stocks go down by a huge amount, I tend to get bullish and play for a short-term bounce. And then conversely, when stocks go up by a huge amount, I tend to get bearish and play for a short-term sell-off. And that's because, of course, anywhere you look at this chart, right, after a major sell-off, what always happens at some point? You eventually get a nice bounce. And then after a pretty monstrous rally, like we saw in the past couple weeks here, what happens? Things eventually unwind and come back down. So with that in mind, at this point here, I'm definitely feeling a bit bullish on the stock market in general, at least for the very short term. And so that's why coming back to Coinbase now, COIN, and let's go ahead and zoom in on this chart as well. And you can see a very similar story here. With the exception of this one up day right here, we've pretty much had 1, 2, 3, 4, 5, 6, 7, now 8 down days in a row. Moreover, let's come back up to the drawing tools and we'll go to the trendline one here. I'm going to draw in a pretty nice support level right around here. Let's draw it over. So call it right around $150 per share. So again, given that we've come down pretty much 8 days in a row and now we're approaching the lows from just a few weeks ago, I do think perhaps this is a decent point to play for a short-term bounce. Definitely does not mean I'm going to be correct here or that we're guaranteed to see a bounce from this point. All I'm trying to do is pick an entry for a trade that has a decent chance of being correct. Right? When it comes to trading or investing, there are never any certainties. It's all about finding situations or opportunities that have the best probability of providing an outcome that you want. So now at this point, let's come over to the trade tab and take a look at the option chain for Coinbase. And this stock does have earnings, I believe, on May 12th. So for this trade here, because this trade's not meant to be an earnings play, that means I want to avoid that announcement at all costs. And so therefore, I'm going to go into an earlier expiration cycle, perhaps the May 6th weekly cycle, with 25 days left to go. So that way, by the end of this trade, depending on if it's profitable or not profitable, whatever, at least it will end before that announcement happens. And as a result, I will avoid perhaps a monstrous move against me once those earnings figures do actually come out. So we'll unfold this tab here and take a look at the put options. Basically, I want to get bullish on the stock, right? And so as you can see here, I've already gone ahead and picked out my strike. So for this trade, I'm going to sell the 140 strike put option. This one has a 28 delta, so it's got about a 70% chance of turning a profit by the expiration date. That's very nice, and typically where I want to be when placing a directional trade. Moreover, because the implied volatility for the stock is so high, and actually I forgot to even show you that. Let's go back to the charts real quick here. And it looks like because Coinbase has not been around for too long, my implied volatility chart down here is missing some data. So let me go and fix that and add a different chart. And there we go. As you can see down here now, this is the regular implied volatility chart that comes built in with thinkorswim. And so even though this chart does not include the IV rank or IV percentile indicators that do come with this one up here, we can still at least make a visual assessment of this chart down below to see if the current level of implied volatility for Coinbase is on the higher or lower end for this stock by comparing it to the past. So right now the implied volatility for Coinbase is just under 88%. That's very, very high just on an individual stock basis. But also for Coinbase in particular, as you can see here by looking at this chart, it's definitely on the higher end. Right, going back over the previous 12 months, most of the data points on this chart are below 88% or so. So basically what all this means is the option prices for Coinbase are much higher than usual, right? When implied volatility, which is basically a measurement of uncertainty about the stock's future, when implied volatility increases or as uncertainty increases, that's also going to increase option prices. So that's why as an option seller, I always analyze a stock's implied volatility so I can find the stocks that have the most expensive options. So now with that said, we'll come back to the trade tab and go ahead and make this trade here official. So I'll click on the bid price and that brings up the sell order down below. Just going to sell one contract here, 140 strike put option. And taking a look at the bid and ask prices for this contract, bid price is 610, asking price is 640. That means for my order here, I'm going to go right in between, maybe perhaps a bit on the lower end. So therefore, I'll try a price of perhaps 620. 620, there we go. And then finally, we'll go to confirm and send and take a look at the buying power effect on this trade. Right now, it's going to require about $1,700 to be locked away for the duration of this trade. That's totally fine. So now we'll go to send. And there we go, just got filled at 620. Awesome. So again, like I said, the trade executions in a paper money account, at least with thinkorswim here, are very, very realistic. And so then for the next step of this trade, I'm going to create my automatic closing order. So now I'll click on the asking price here, and that brings up a buy order down below. I'm going to try and buy back the exact same put option contract. And as usual, I'll try and do so for half price. So half of 620 is 310. So of course, if Coinbase can recover a bit from this point and move a bit higher, and also when that happens, I do expect to see implied volatility to come back down. And both of those things, along with time decay, will reduce the price of this put option, hopefully down to $3.10 on a per share basis. And at that point, my GTC closing order would get executed, and I would be taken out of the trade for a nice profit here. So lastly, we'll make this a GTC order so it's always in place, and then confirm and send that one as well. And then the final step of this trade is, like I mentioned, for this one here, I'm going to manage it the way I normally do with my particular options trading style. So that means if I'm totally wrong on this trade, and let's say Coinbase continues to fall lower and lower and lower, and eventually falls below 140 bucks per share, my put strike right, then at around that point, I'm going to short sell 100 shares of the stock. And as a result, that will totally cover me if the stock continues to fall even further. And if that does happen, but eventually the stock decides to bounce back and rise back above my put strike once more, then at that point, I'll buy back the short stock for a small loss and carry on. So now we'll come up to the current price of Coinbase and click on that and go to sell. And that brings up down below a short sell order to short sell 100 shares of stock. And I will have to change a few things about this order. Number one is I'll have to change the limit order, which is here by default, to a stop limit order. And so for the stop price here, we'll say that if Coinbase does fall down to a price of perhaps $138.50, then at that point, this order will become active and it will try to short sell those 100 shares of stock. And then for the limit price, which is basically the lowest price I'm willing to short sell those shares for, I'll set that to perhaps 138. And then also we'll change this from standard pricing to mark pricing, so that way this order judges the price of Coinbase stock simply on the bid-ask prices. And unfortunately, with short sell orders, you cannot make these GTC orders. They will actually get denied in real life. Although I think for paper trading here, it still will allow a GTC short sell order. But just to be 100% realistic, I'll keep this as a day order. And that means as a result, I will have to simply recreate this order every morning, which is not a big deal. And then lastly, we'll confirm and send this and be done with Coinbase. Okay, so that's my new Coinbase position. And then next up, let's come back to the charts. And for my second trade, we'll go to NUE, which is Nucor Corporation, which, like I mentioned, is involved in the production of steel and other kinds of steel products. And so for this trade here, I'm going to manage it using the wheel strategy, which is basically a mixed approach of both selling options and holding stock for the long term. So it's meant to be more of a long-term investment kind of approach. And that's why, in my opinion here, it's only best to use this approach on stocks or on companies with real fundamental value. Right? So I, for example, would not use the wheel strategy on a company like AMC or GameStop, even though the implied volatility for those stocks is very high and they're good candidates for selling options. But for this particular strategy, I personally would not use it on those stocks. But in the case of Nucor here, this is a very profitable company that's been around for a long time, as you can see down here with the earnings announcement dates. For example, with their most recent earnings announcement, they had a profit of almost $8 per share. And pretty much every announcement prior to that, this company has shown a profitable outcome every quarter and looks like it has been steadily increasing over time. And my guess as to one of the main reasons why this is the case is because of inflation, right? Inflation has been hitting 40-year highs in recent months, and that has definitely impacted, dramatically increased the prices of things like steel or other kinds of metals, commodities, basically any kind of input resource used to produce a final good. So it's no wonder, of course, that all through these inflation fears that Nucor has done exceptionally well, right? This company is making a tremendous amount of money simply because the price of steel has increased by so much. And of course, construction is always ongoing. There's always going to be probably increasing demand for steel producers. And so that's why I definitely believe in this company for the long term. Moreover, if we come down here and take a look at the implied volatility for this stock, it's also still pretty darn high. So this stock really has the best of both worlds, high implied volatility and therefore high option prices, and also has real fundamental value and is profitable, which is more than I can say for most companies nowadays. So right now with the implied volatility for Nucor right under 53%, this translates to an IV rank of 60%. That's very good. And also an IV percentile of 86%. Very, very good. So again, these two indicators were not available on the Coinbase chart, but obviously they're showing up on the Nucor charts here. And basically, they just quantify in one number how high or low the current value of implied volatility is compared to the past 1 year. So both of these indicators, along with just making a visual assessment of this implied volatility chart here, all show that right now the IV is still much higher than usual for the stock. And therefore, the option prices for Nucor are much higher than usual as well. So for the wheel strategy, let's now come over to the trade tab here and take a look at the option chain. So because this strategy is a more long-term investment-like approach, I therefore don't really care about my trades overlapping with earnings. So as a result, I'll go into this monthly expiration cycle here in May. And that's because the monthly cycles typically have the best liquidity or the most actively traded contracts. And so coming over to the put options here, I think I'm going to sell the 145 strike put option for hopefully around 570 bucks as a credit, which is very, very nice. And just like my last trade, the delta on this contract is right around 30, so this is also right in line with where I like to be on a directional trade. And so the way this is going to work is I'm going to sell this put option, of course, and then I'm simply going to hold it all the way to the expiration date. And if by, looks like May 20th, if by that time this option contract has expired worthless, then so be it. I make a profit of around 570 bucks. Very nice. And then at that point, I'll do the exact same thing again. I'll sell a new put option, collect more premium, and just hold it to the expiration date. Now, eventually there will come a time, right, where by the expiration date, the stock price is actually below my put strike. And therefore, I'll get assigned on the put option contract and have to purchase 100 shares of the stock at the strike price. And once that happens, then so be it, right? I want to be in this stock for the long term anyway. So if I can get assigned shares of stock, then I will simply hold that stock for the long term. But also with that long stock position, I will pair it with a short call option, or basically a covered call option at that point. And in that way, that still allows me to collect more and more credit pretty much every expiration cycle, no matter what side of the stock that I'm on, either with put options or with call options. In either way, in either case, I'm always collecting credit. So in essence here, this really is a pretty simple strategy, although at times it can get a bit more complex with things like your cost basis or which exact strikes I should be selecting and things like that. And we'll deal with those kinds of situations when they do eventually present themselves. But for right now, just to get into this position, the first thing I have to do is simply sell a put option. So now I'll click on the bid price here for this 145 strike put option, brings up a sell order down below. Just going to sell one contract here, and I'll try and do so for right in between the bid and the ask price, which right now, bid price is 560, asking price is 575. So I'll try perhaps 560 bucks as my starting credit here. And then lastly, we'll go to confirm and send and check the buying power effect on this trade. It's just under 2,200 bucks. That's fine. So we'll go to send. And there we go. Just got filled at 560. Awesome. And that's pretty much it for this trade, right? No need to create a GTC closing order, although you certainly can if you do want to take your profits a bit early. But for this case, I'm simply going to hold this put option all the way to the May expiration cycle here. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.